Hello all, and welcome to Duplicate Success International Monday Night Webinar. Today is Monday, November 6th. My name is Randy Crebs, Gold Director from Salt Lake City, Utah. I have the distinct honor of introducing the host of tonight's webinar. He is a very well-respected business leader and mentor in this industry. You will definitely want to have your pen and paper out, sitting up, paying attention, and taking notes as you learn how this industry expert continues to build his business successfully. He has achieved the rank of Emerald Director within our company. He is the co-founder of Duplicate Success International. He is an amazing leader, mentor, and most importantly, I'm very proud to call him my son. Jared, are you on the line?
I am. Thank you so much, Dad, for the great introduction. I really appreciate it.
You're welcome.
All right. Well, welcome everyone to tonight's webinar. You are in for a big treat. We have a special guest who's a certified public accountant, and he is going to be laying it down tonight. All kinds of great information, stories, and he is my personal accountant, mine and Crystal's. So we know David personally, and he has saved us tens of thousands of dollars over the last 8 years. So definitely excited for tonight's training. And before we get into the training, I always want to start by just reminding you of our team DMO. That stands for Daily Method of Operation. If you do these 3 things, you will be successful in your business. Number 1, do your 2-2-2 for the day. That's getting 2 new presentation videos out, 2 follow-ups with prospects on the fence, and 2 calls to existing clients or team members. Obviously, that is the engine of your business. Anybody can do that in as little as an hour a day. Some people do it in between 5 minutes here, 5 minutes there. But that is the engine of your business. The next thing is 15 minutes of personal development each day with either reading books, listening to audios, or being on webinars like this. That personal development makes you better when you're prospecting, when you're doing your 2-2-2. And then number 3 is do 1 event per week, and that's either a home event or a local event, but do something with a group once a week for your business. And you are building your own tribe. You are building your team. And by doing 1 event per week, you're starting to build something local, something in your area. You know, we have technology, and technology is really important, but this is definitely still a very much face-to-face business. So much business happens like that. So this is the DMO, and if you do these 3 things, you will have success guaranteed. And I'm not kidding about that. This is literally what it takes, and this is how it works. This is what's gotten us to where we're at, and many other USANA associates also. So there's 3 keys to a breakthrough, and number 3 is you got to have a good strategy, which is the DMO. The DMO is a proven strategy. Number 2 is the stories you tell yourself. Make sure you're telling yourself, I can do it. Make sure you're telling yourself, you know what, I'm just like everyone else. Tell yourself the right stories. Every day I tell myself that we are making impacts in people's lives, that we are the next diamond directors in USANA. So tell yourself those stories. It's very important. You know, sometimes people say, they tell themselves stories like, I don't have time, or I don't have, I don't know technology, or I'm too old, or I'm too young. You got to change your story, all right? So that's very important. And then number 1 is the state that you're in. That's your energy and your state of mind. If you're high energy and you're in a good state of mind, that's the time to talk to people about USANA. That's the time to make your prospecting calls. If you're low energy, go take a nap. Go have a bite to eat. Get yourself back in state before you take action. That makes a huge difference on your results. And those 3 things will literally lead you to a breakthrough in your business. So now we're going to do some team recognition, and basically we're recognizing people who are doing the DMO. How do you know? Because they're signing people up. So welcome to the new clients that started in the last Igor Nablat, new client introduced by Jared Harris. Well done, Jared. Fantastic work. You're continually signing up new clients. Very proud of you. Also welcome Sinead Ermias, new client introduced by Renee and Megan Martinez. Fantastic job, Renee and Megan. So consistent, and I love this screenshot of Renee there in the top of the screen, and then Sanat, I guess, right there on the computer. That's definitely taking advantage of technology. Fantastic work, Renee and Megan. Also, let's welcome our new associates who have started in the last week. Welcome Crystal Myers, new associate introduced by Renee and Megan Martinez. And I don't think she's on right now, but Renee, if she's able to get on towards the end, we would love to say hello to her. Welcome, Crystal. Super excited and fantastic work, Renee and Megan, helping new people start their business. Also, let's do some recognition for our rank advancement. We had Mike Baez advance to the share level last week, which is his first $50 check. Now, if he's doing that every week, he's making $200 a month and his products are paid for. Mike took that first step this past week. Mike, I'm very proud of you. You've definitely shown a lot of commitment. You've shown a lot of professionalism, and it's super exciting to see you getting recognized by the company. And it's just the first of many, many steps that we see you taking with us, Mike. So congratulations and thank you again. Also, some special recognition is going to go to, me and Crystal. We were number 22 top earning emeralds in the U.S. Thank you, Dad, for making this slide. Thank you, Team DSI, for all you do that continually helps us be successful. And we have to bring Adriana Perez on the line because she was number 2 top client enroller in the United States market and actually number 11 globally in all the 20 countries. So literally, Adriana had such a great week that she was amongst the elite USAN associates around the world, not only just in the United States. And so I want to bring you on the line, Adriana. Go ahead and unmute your phone. Welcome to the call, Adriana. Tell us, what is making you successful with your business?
Hi, everyone.
Hello.
I didn't know that. One second, please. I didn't know that I was number 2 and 11. Wow, that's nice. It was just I guess the tracker. I mean the WAP. So
Yeah.
I mean, making more calls obviously helps you enroll more people. So that's really all I did.
So in other words, you just stuck to the basics.
Yeah, basically.
And basically, and I know that you had a perfect DMO week last week, meaning that you did 2 videos a day for 6 days in a row. And how did that impact your business the next week?
A lot. So that was really good. I'm shooting for another perfect DMO this upcoming week. Last week I didn't.
Ooh.
I kind of dropped the ball a little bit. But that was only because
Understandable.
My family and I were at the hospital all week from like Monday to Friday, as you know. And I didn't really.
Not everybody else knows. Not everyone else knows. So congratulations, Tia Aya,
Yes,
for your niece being born.
Mm-hmm.
That's very exciting.
Yes, my whole family is really happy about it. We're all excited with the new baby. And that's basically where I was all week last week, after work until very late every day while we waited for her arrival. But now she's here, so now we're all happy, and now we can, go to sleep early. But this week I'm gonna get back up and start sending out those videos again. So let's see what happens at the end of the week.
Beautiful. Well, Adriana, I want to congratulate you for being number 2 in the United States and number 11 globally. I find it funny that you did not even know that you scored so high. But you know what? I've actually seen that happen a lot, where people are just focused on the basics, getting videos out, doing 3-way calls, and helping people. And they don't even focus on the recognition. And then once they kind of put their head up and look around, they're like top in the company. And it's cool to see that happening with you, Adriana. Keep up the great work, and thanks again.
Thank you.
All right. Also, big congratulations to Mr. Carlos Gomez for being number 10 top client enroller in the United States market. This is a picture of Carlos at Sonic, where he works. Actually, no, he's left Sonic now. I'm not sure where he's at now, but I know that he's recently been hired by a new company. Big congratulations to you, Carlos, to continue to work your business around your very busy schedule. Also, big congratulations to Michael Baez, number 10 in the United States as well. And, Mike's not on this webinar because he's doing a gig. He's playing music as we speak. But big congratulations, Mike. I'm super proud of everything that you're doing. Special announcements. We have free welcome kits through November 11th, everyone. So we still have 1 week. Basically, this Saturday is the last day to get free welcome kits. So I highly recommend that you do that for your new associates. You know, let them know it's better for them to sign up this week or in the next few days to get this, because after that it goes back up to the $29.95, and the welcome kits are so cool, so new and improved with all the cool stuff that you see there. Back when I signed up, we didn't have any blender bottle. We didn't get any blender bottle or USANA backpack or any of this cool stuff. So no USANA stationery. So very, very cool, exciting about the welcome kit. Also, mark your calendars for next Tuesday, November 14th at 6 a.m. Eastern. 7 a.m. No, 6 a.m. Eastern is 5 a.m. Yeah, I guess that would be 5 a.m. Central, 4 a.m. Mountain, 3 a.m. Pacific. There's going to be a very small window to order Celavive, the USANA brand new skincare that has the intelligence technology. This came out at convention and has been so transformational to people's skin. People are seeing results within 24 hours of their first application. It's going to transform our business as well. So I want to encourage you to go, get on and invest in a kit, start using it yourself. And we'll definitely be buying one. You know that, because my wife, she needs her Celavive, and so do I, because I use it as well. So mark your calendars, because it's going to go fast, and then once they're gone, they're gone. So, yeah, so that's going to be exciting. And then also there's a future leader incentive going on right now. And basically this is all around getting your business to make you $1,000 in 1 week. I want you to make this a goal. This was my first goal in USANA, was to get to Silver Director. But even existing silvers like Renee and Megan Martinez can play in this game. And what this is basically, it's actually, I'm going to go to the next slide to explain it. Oh, it's not there. So if you get to $1,000 paycheck, then that's step one. But the next step is to average $300 a week for the 12 weeks. And when you do that, you're going to win a big, big training on the April U.S. National Celebration. So we'll get more details. You can actually go to the hub to watch that. But even if you're an existing silver, Renee and Megan, you can participate, or all of you who are aspiring to get to this level can participate. But let's go for it, because you can do this and make it a goal. And contact me if you want to play. And we will plan and make a strategy to get you there. We're getting chats now. People are chatting. Feel free to chat. That's right, Jared Harris, $1,000 a week, bro. Get you on your 200-point auto order, and it's going to happen, bro. All right. So right now we're in the midst of a 90-day incentive from the company. Any associates that have enrolled between now and November 17th, actually it was between August 16th and November 17th, any of those associates are eligible for a 25% commission bonus. So if your new associate makes $1,000, then they would get a $250 bonus, right? So whatever they make, it's 25% bonus. And big congratulations to Brenna O'Reilly, who's participating. Christina Ferris. Oh, I'm sorry. Brenna O'Reilly from Salt Lake City, Utah. Christina Ferris from San Antonio, Texas. Patty Waltman from Jordanton, Texas. Cesar Passain from Seattle, Washington. And Clayton Hell from Tulsa, Oklahoma. Man, we're very well represented. Super proud of each and every one of you. Congratulations. Oh, and also Crystal Myers now from Poteet, Texas. We don't have the picture there for some reason. We'll add that in there. Also, guys, plan for this Wednesday at high noon Central, 11 a.m. Mountain. We have Ruby Director Chris Weiss Norris, who has literally built his business part-time. Oh, great. Hold on. I think my computer got overtaken by FaceTime. So while my computer's coming back to earth, Mr. Weiss Norris has worked part-time in his business the entire time. He's always been in corporate. And he has a great, great story. So make sure that you're there Wednesday at noon, and you can invite guests. Okay. Forwarding the slides. When you have a new client, please make sure you add them to the USANA clients page. right there and make them feel special and important and make a post. When you have a new associate, make sure you add them to the Team DSI page and make a post. And thank you for commenting. You're doing such a great job commenting. I'm really thankful that you do that, whether they're on your team or not. It's very exciting for these people to get great welcomes when they start with their business. Also, we have Dr. Ladd VIP protocol. If you want protocols from the man himself, Dr. McNamara, and so it's only $29 a year, I'm sorry. But if you want to ask him questions, and I highly recommend you upgrade and get this whenever you can afford it, for basically $200 a year, you can literally type questions to Dr. Ladd and he responds. Any question you want about if you have a friend with some problem, some health issue. And if you use the Team DSI coupon code, the price goes down to $129. So definitely recommend you do that. You go to drladdvip.com to get that. Okay, so we're going to take a 5-second pause for editing purposes, and then we're going to be on with our guest, Mr. David Schnaufer. Dad, can you unmute David? Or David, can you unmute yourself?
Yes, I am here.
Awesome. All right, we're going to take a 5-second. Yep, I hear you great. Take a 5-second pause. Get right into it. Hello and welcome to tonight's training webinar. My name is Jared Crebs. I'm pictured here with my wife, Crystal. We're Emerald Directors, co-founders of Team DSI. And tonight's training webinar features certified public accountant David Schnaufer, who is my personal accountant. He has been working with me for the last 8 to 9 years. And when I first met David, prior to working with him, I actually had a different accountant that did not know as much about the tax savings with a home-based business. Not all accountants are created equal. And David helped me so much when I started with him back in 2009 that I've literally minimized my tax burden the whole entire time. You know, the last couple years we've made 6-figure income with our USANA business, but after the deductions and everything else, we've actually paid in taxes like a couple $100, okay, instead of thousands and thousands of dollars. So I'm sure David has saved me and my wife well over $40,000, $50,000 over the last several years in tax savings. So it's definitely been a big blessing in our lives. And I want to give a big shout out to Lillian Galdiano for being persistent with me in getting David to be a guest on today's webinar. Thank you, Lillian, for that. And David, thank you for taking time out of your busy schedule. I know you have literally thousands of clients that you serve all over the United States. One thing that I love about working with you, David, is that we get to work over the phone. I don't ever even go to your office. I just email you stuff, you call, we call each other. But thank you for being such a servant-hearted person, such a great friend, great friendship we've developed over the years. We're super blessed to have you. And the floor is yours, David. Tell us some great stories. Tell us whatever you want to tell us, and then we can open it up for questions here after about 10 to 15 minutes.
All right. Well, I'm going to jump into some tax strategies, some tax deductions everyone may not have thought of, that they can add to make sure they minimize their taxes. But first off, Jared, thanks for the invite. So glad to be on the call with you. I've always enjoyed our phone calls, our regular phone calls, talking about accounting or tax issues, and then we talk about a lot of other subjects as well. And so I always enjoy that. So I mean, having a business, as everyone on this call is in,
we talk a lot of sports, guys.
What's that? Oh, sports. You mentioned, yes, absolutely. We do that a lot.
We always talk a lot of sports. Yes.
Yeah. And one thing I've learned about Jared is, I'm sure you all know, he's a great guy, and he's very compassionate. He's always looking out for the least in all walks of life, including in the sporting industry, always rooting for the underdog. So that's very admirable. But deductions-wise, I'm just going to run through some. If anyone has questions, I'll take them in any order, or we can wait till the end. But being able to, having the knowledge to minimize your tax deduction is a very important asset to have, because people, the scriptures say we perish for lack of knowledge. So it's important to keep learning. As you're learning from Jared how to grow the business, you can also learn the business strategies in order to help yourself as well. A lot of the more wealthy individuals in the country, they keep their taxes lower because they utilize what is allowable in the tax code. For example, using multiple entities. We'll touch on that a little bit later, but knowing, hey, how should I be taxed? Do I want to be taxed as a sole proprietor, as you might be right now if you just started a business, or even if you've been in business for a while? If you're taxed as a sole proprietor, do you know if that's the best way that you should be taxed or not? Have you determined if an S corporation might be better, if a C corporation might have some advantages, or have you determined if you can use more than one at the same time? Perhaps you run your business as a sole proprietor and have another system set up for fringe benefits. So there's a lot of CPAs and a lot of accountants don't talk about that kind of thing, how to use multiple entities. And so we can touch on some more details on that later, but we'll just start out with some of the common deductions. Of course, the auto is the tip of the mind for most people starting a business. As you may know, the federal mileage rate, it does change a little bit every year. Right now for 2017, it's 53.5 cents per mile. And every time you jump in the car to do anything related to your business, you need to keep track of that, write it down, keep a mileage log. Now, not everyone that I have as a client or do taxes for has a mileage log, but you would just need to, if you got audited, the IRS would want you to have that. So you would need to be able to reconstruct it, pull all your receipts. Say on a certain day you went to the office supply store, okay, write it down. If you keep an appointment calendar, every time you meet with somebody and you go back and figure out the mileage that you drove all those days, you'd have to reconstruct it that way. But if you get in a habit, the good habit of writing down your miles every time you jump in the car and where you're going, the purpose, the business purpose, then you can get a very healthy deduction with, as I said, 53.5 cents per mile. So if you drive 10,000 miles, that's $5,350 that you can write off. And then another important thing to know is how to make personal trips into business deductible trips. As an example, if you're going to go to the mall, maybe you have to do some shopping for your kids, back to school or just any time. And you say, okay, well, let's make this a business trip. Let's put out some flyers. Let's hand out some business cards. Let's talk about our business while we're at the mall. And then while we're there, go ahead and do your shopping. And it made it a personal trip into a business trip. This type of industry is, as you know, something that you can do everywhere you go. If you go to the grocery store, as an example, another example of that, you're going to fill up your grocery cart, but maybe you're running an ad in the green sheet or the circulars that they put in the front of the store. If you have an ad in there and you say, well, you need to check your ad to make sure that they didn't miss up your ad and put your phone number wrong, or maybe they got excluded. So you got to go to the grocery store with the intent of making sure your advertising is still going. Oh, and while you're here, if you fill your grocery basket, if the primary purpose for that travel was for business, then that becomes a deductible trip. 53.5 cents per mile. So driving across the country, driving to convention, driving, you're going to take a vacation. That leads into another one, is travel. What a great business this is to be able to deduct travel. If you have just a job, more than likely, if you're going on a vacation or travel just about anywhere, you're not able to deduct it unless your employer is sending you out on a specific trip. But when you're able to grow your business anywhere that you go and meet with people and prospect, then you're able to make that a deductible travel trip. You have to make sure you do business. There's some important IRS guidelines regarding that. You can't just hand out one business card and call the whole trip a write-off. But if you're going to actually take business activity of a little bit of substance, so we can get more details. If you give me a call, we can discuss that. But actually do some business while you're out on vacation. You can make that travel, getting to your vacation destination, deductible, and potentially, depending on the amount of business you do on the days that you're in that location, potentially get your hotel days also deductible. So Travel and auto are huge. Obviously, your meals. I'm sure you're meeting with prospects. If you pay for their meal, if you do, your networking events, those are going to be, meals is deductible. As you know, at 50 cents, or excuse me, 50%, unless you're doing a presentation where you're providing the meals for everybody at the presentation, then all the food at the presentation is 100% deductible. Now, just in general, as we go through this list, you just be thinking, is the payment, the expense that you're incurring, ordinary and necessary to do the business? All right. If the answer is yes, then more than likely it is deductible. That's the IRS guidelines. Is it ordinary and necessary? Is it ordinary and necessary to go to a networking event and pay the dues to get in? If the answer is yes, then you can deduct that. That networking event, your dues and memberships, etc. Things like advertising, obviously, I mentioned that, promotion, office supplies, and of course, your home office is a very, very important deduction for most people. If you work in a spare bedroom or even a portion of your living room, it doesn't even have to be a 100% of that room. If you can carve out any portion of one room or multiple rooms, what you're able to do is take the square footage that you use for business. And again, either a full room, if you're using it, the IRS guideline is exclusively used for business. So if you use any portion of your home, maybe, like I said, maybe it's a portion of the den, or you're in the living room, or maybe you do have a spare bedroom in your home that you can convert into a home office, then you add up all the different areas that you're using exclusively for business, and then you take that square footage, divide it by the square footage of your entire house, and you get that percentage. And so then you take that business percentage and multiply it. If you're renting, times your rent expense. If you're owning a home, then times your interest, insurance on your home, your utilities, the cleaning costs, the exterminator, the lawn mowing service. All of these things become deductible by that business percentage, that business square footage divided by the total. And some strategies along with that is if you already have, say you're using a spare bedroom, and but you have room in the den, all right, you've already got that fixed square footage, and say you've got some cabinets for your samples that you give out to people or other supplies. If you were to take that cabinet and put it in the den, then not only do you have the office that you already have that square footage, but now you have a business cabinet exclusively used for business. And if you take the square footage that cabinet takes up plus a reasonable walking distance around it, therefore you've increased the percentage and therefore increased your deduction. So that's a good way to increase that. And of course, if you own the home, along with that, you get to take a depreciation on your home based upon the cost of your home. There's depreciation added in there. So that can also be a healthy deduction. Let's see, health insurance. If you're not covered with full health insurance by your employer, if you're paying anything out of pocket, right now, you may have known that you're able to deduct all your medical costs if you itemize your deductions on a Schedule A at the very then 10% of that would be $5,000. If your medical is only $6,000, you would only be able to deduct $1,000, the amount that exceeds the 10% of your AGI. But if you're not itemizing at all, then of course you would get no deduction. Now, with health insurance, being in this industry, being self-employed, if you're having a net profit from your business on your Schedule C, you're also able to deduct your health insurance on page 1 of your tax return as self-employed health insurance, and therefore you would get to remove it from the Schedule A onto page 1. So that can lower your taxes as well with that deduction. Let's see, another good one and much unknown is to be able to hire your kids. Now, parents, if you have kids right now, you know how costly it can be to be able to have to pay for everything that they need in their life, all their wants and their needs. Well, how would you like to be able to put your kids to work in your business? and it needs to be obviously something reasonable and reasonable hours, and you document their work, document the hours that they work, etc. But if they're able to help you in your business, maybe passing out flyers or whatever activities you could use them in, cleaning the office, etc. And then you give them a reasonable wage. And what's great about this is you can deduct what you pay your kids as wages. And what's also great about it is in the normal situation of working, you have to withhold Social Security and Medicare. But with your kids under the age of 18, they can work for you, and you do not, as the employer, you do not have to withhold Social Security and Medicare, which would defeat the purpose. If you had to withhold 7.65% and match it by your company of 7.65, it would defeat the purpose. For the most part, have to pay 15.3%. But hiring your children, you don't have to do that. So you would still give them a W-2 at the end of the year, but only box 1 would have the salary, the wages in it, and box 3, 4, 5, and 6, which are Social Security and Medicare wages and withholding, those boxes would be blank. And then it's the wages to your kids. Now you can pay them any amount. There's no limit on. There's no cap on what you can pay them if they're legitimately working for you. But if they earn less than the single standard deduction, then they don't even have to pay taxes. So that amount, I believe this last year was $6,300. So if you paid them $6,300, they wouldn't even need to file a tax return. And if they did, of course, they wouldn't have to pay any taxes. So there's a great benefit. Everything you're paying for them, now pay them, pay your kids, write a check to them, make it legitimate business here, have a business checking account, write them a check, set them up with the custodial bank account, take their check and deposit in their bank account, and then they can turn around and you can use that to buy everything they need or save it for the college fund or however you want to do it. Let's see. Another little known deduction is a really great benefit that you can use in your business, in this industry, and that is the ability to rent out your home tax-free. Now, in the Internal Revenue Code, it says that you can do that as long as you rent it out for 14 days or less. All right. So if right now you've had thoughts or are doing it right now where maybe you're renting out a conference room in a hotel, and you said, well, what if you could and if you transferred that and rent out your living room, and you determine, let's say the going rate for a equivalent room in a hotel, let's say that's $500, and then 14 times a year you have presentations in your home, and your business rents out your living room for 14 days times $500. That's $7,000 that you could pay to yourself out of your business as tax-free rent income, and creating a deduction of rent expense of that $7,000. So there's something that most people haven't heard of. So there's some cool stuff. And of course, getting back and getting to the entity discussion I discussed earlier, once you're profitable, or making a decent enough profit where you're looking at your self-employment tax number. Self-employment tax, when you have a profit in your business, of course, you pay income taxes on it according to your tax bracket, but you also, unfortunately, have to pay self-employment taxes, which is 15.3%, and it's how a self-employed person pays the Social Security and Medicare that they would normally have as an employee. But now, since you're self-employed, you're the employee and the employer. So therefore, as an employee, you pay 7.65, and the employer pays the other 7.65. Now you're the employee and the employer, so you pay 15.3. On $50,000 net profit, for example, you would pay self-employment taxes of $7,065. Okay. Now there's a way to minimize that, cut it basically in half, and that is to learn about other entities, namely an S corporation. And you'd run the business. You can set up a business name, get incorporated with your state. We do this service as well. It's very simple to incorporate with your state, and then let the company know that you have a business name now, and have them start issuing your checks to your business name and get an EIN number. And then when they give you your 1099, it will no longer be in your personal name and Social Security number. It'll be in your business name with EIN number. So you're just moving your income. And there's a lot of benefits to this as well. in that you move. Everybody, I don't know necessarily that anything for certain is an audit risk. A lot of people like to use those words. Oh, that's an audit flag. Oh, I don't want to take that deduction. It's an audit flag. That. Now, if you're higher than, like some of the things I've discussed, being able to increase your home office percentage, being able to increase your mileage by making a business trip to coincide with your personal trip, for example. If the IRS sees that maybe your home office percentage is higher than the national average, and on your tax return, there's a separate schedule that shows all the numbers that calculate. It shows on the home office schedule the exact square footage that you're using for business and the calculation of everything. And if you drive your car, say you get your mileage up and you're driving 90, let's just say, for example, you're driving your car 95% for business because you prospect everywhere you go. And the IRS looks at that and says, 95% for business, that's higher than the national average. Let's audit this person and determine, let's see their their mileage log to make sure that this is legit. And so that could happen because those numbers are fully presented on your Schedule C and corresponding schedules. But when you move out your activity onto a S Corp, you can do the home office calculation and the auto expense mileage calculation on a spreadsheet or on a handwritten sheet of paper, and then do a journal entry, accounting terminology, just journal them into your business books as a single line item, auto expense, round number. They don't see how you came up with the calculation, the 95% in this example. And journal in your home office deduction as office expense, $2,000 or whatever it calculates to be. And nowhere in there is any kind of, you're not showing a big schedule, even if it's legit, having to prove anything to the IRS if they determine that, oh, this is higher than the national average. So you can just put it in as office expense, not with a bunch of detailed numbers for them to raise an eyebrow at. So, and then as I was saying about the self-employment tax, you're able to, cut that down, long story short, by paying yourself. There's some administrative activity needed with this because you would have to pay yourself a salary with Social Security and Medicare withholding. Unlike the kids that you don't have to withhold it on your sole proprietorship, you would have to treat yourself as an employee of your S Corp and pay yourself a reasonable salary. But then after that, as long as you're paying a reasonable salary, you can give yourself tax-free distributions. So in the example I gave of the $50,000 net profit in your sole proprietorship, where you pay $7,065, if you make the same $50,000 in your S corporation and then pay yourself, as you need that money obviously to pay all your bills, and you pay yourself, for example, a $25,000 salary, and then in which you withhold the Social Security and the Medicare and do the company matching and so forth, the 15.3% combined on the $25,000 salary portion. And then on the other $25,000, you call it a shareholder distribution, and you take out no Social Security and Medicare. It's not considered wages. And long story short, so in this example, as you see, you're therefore only paying the payroll tax or self-employment tax equivalent. Instead of on $50,000, you're only doing it on $25,000, thereby saving approximately half of that $7,500. Now, a lot of people might immediately think, well, what if I just do all distribution? That sounds great. I'll pay zero. I won't pay any of the $7,000. True, and you could potentially get away with that for year after year after year until the IRS comes calling. And now, normally they don't. I'm always I don't talk to people. I don't try to scare anybody in anything. It may not happen for many years. The chances of being audited on a personal return or on a business return is very low. But if it happens, unfortunately it does happen. And if it happens, then, they could, if you did that, and see the IRS standard is the reason you wouldn't want to do that is in this scenario, the IRS expects a quote unquote reasonable salary. So I used 50-50 as an example. And I have seen a court case, I won't get into all the details of that, where the IRS and they hired a salary expert who did an analysis, and long story short, it allowed a wage that calculated to about 46%. That was very curious. But the IRS does not have any, 50% is okay, or 60% is okay or 40% is okay. It just has to be reasonable. But in most cases, 50% would work out to be a reasonable wage. And so anyway, we can discuss more than that if you choose. Just let me know if you have any questions about that. But so that's a great way to go.
Yes, David, we have questions.
What's that?
Yes, this is great information. I don't know if you're able to see the chat, but we've been chatting it up about everything you're saying. It's awesome. And I know that there are a lot of people with questions on the line right now, and I just want to use this last 10 minutes for them to ask any questions. Basically, is that okay, David?
Yeah, no, I don't see the chat. I'm on the phone. This app. So anyway,
okay.
Yeah, if there are any questions, you'll have to read them. I can't see them.
Okay, yeah, I'll read them if there's any that people actually type in there. But this is your chance to ask a question to bona fide, certified public accountant, and this is my personal accountant, David Schnaufer. What is your questions, everyone? You can ask them right now. You can unmute yourself or type them in the chat. But let's use this time wisely. David is a man in demand. He has a lot of clients. He has a lot of expertise. We got our first question here from Lillian Galdiano. She says, can you deduct house cleaning for business?
If they're also cleaning the house or cleaning your if they're cleaning your home office and the rest of the house, then that would fit into the home office percentage calculation. Okay, but now if you hired them specifically to only clean the home office, then you can deduct obviously 100%. But if they're cleaning the whole house, then indirectly they're doing that business portion, that percentage we talked about would be deductible in the home office.
Okay, so it's basically a percentage of the house that you'd get to deduct. Like, so if it costs $100 to clean the house and $20 from that?
Right.
Yeah. Okay.
And cell phone, everything, it's a couple of things I saw in my notes I didn't mention. Is your laptop, here's a good one. If you start a business and you already have a laptop, you don't have to go buy a new one. If you already have office furniture, you don't have to go buy new stuff. You can start to depreciate it from the date you place in service. So how it would work is if you bought a set of furniture for, let's just say $1,000 2 years ago, and it was personally used, and then 2 years later you start in this business and this is good stuff. I'll use it in my home office. You can't deduct it you can deduct it at the lower of cost or fair market value. So most things depreciate a little bit. Years later, I'd say it's worth $800. So that there's extra stuff. You can depreciate things you already have.
Hey, David, you broke up a little bit. I don't know what happened there. Can you repeat that last little thing you said? It cut out for everybody.
I was talking about furniture and laptops and things that you already own prior to starting in the business. Okay, so how it works is
Adriana owns a laptop. She has a really nice laptop, and she had it before she started her business. So how would she write that off?
Well, she'd be able to depreciate it based upon the fair market value of the laptop. Said, unfortunately, a lot of things go down in value. So if you bought it new 2 years ago for $1,000, it might only be worth $800 or $700 when you start the business. You determine that, and then whatever the lesser value is of cost or fair market value, if it's worth $800 when you start the business, you can depreciate that beginning at that $800 value.
So she gets an $800 write-off on her laptop because that's what it's worth at this moment.
Right. That's it.
Wow. And she already bought it like 2 years ago. So that's cool. Wow. She says she paid $700 to $800 for it. So you could probably write off $500 for it, Adriana. Cool. Okay. Great.
Jared,
we got more.
I have a question.
Oh yeah. Go ahead, Phyllis.
Thank you. David, if you depreciate your home, what happens when you sell it, if you were to sell it?
Well, there is that's talking about, business recapture, depreciation recapture on it. But in it should not have no tax effect because, with homes, of course, you have the $250,000 for a single person. Any gain is not taxable. And also it's up to $500,000 for married. So, if you use it, because I'll just say there should be no tax consequence, but I would need to verify that, to be honest with you. I don't believe there's any tax consequence for that, though. But
Okay.
if you send me an email, I can get you an answer right away.
Okay, thank you.
And David, what is your email? I can type it in the chat in case people want to contact you and possibly work with you.
Sure, it's David at, and then my website, which is the word the, THE, then small business, all spelled out, CPA.com. David at the small business, CPA.com.
Okay, cool. I just put it in there. And how much does your services cost for somebody who's, currently just started their business and, they don't know, they've never used an accountant, maybe they've just done TurboTax and they want to start going pro and whatever else. What would you charge to do their tax return?
Well, just everybody could just give me a call and we'll discuss it one-on-one. I've been, let's just say you'll find it too reasonable. I've been challenged that I'm less than H&R Block. So, which is,
what's your office number?
It's not good on my side of the fence. So, just give me a call and we can talk about it. Anyone who's interested.
What's your phone number that people can contact you at?
The office is 972-798-2046.
Okay, and then we just got a question from Adriana Perez in San Antonio. She's a very serious business person who's also an accountant. And she wants to know an approximate, what's a ballpark figure for someone to hire you that's new?
For just the tax return or accounting? I do, some people
actually,
in the industry,
I guess both, right?
Accounting.
Because you can actually tell us both.
Well, that was the question you just asked as well. So just anyone interested, and I'll just give me a call, and I'll tell you the fees when you give me a call.
Okay.
On the accounting side, it depends. It varies. Because some people have a lot more transactions than another person, so it makes a difference in that regard.
Okay, totally understand. So Adriana, you can call that number tomorrow and definitely talk to David. And it depends, I guess, on the amount of transactions that you do and whatever else you have going on. So I know that David works with me not only with my USANA business, but he also works with me on my personal taxes because it's two separate tax returns. And also Crystal now since we got married. So he does it all. So just give him a call tomorrow. All of you who want to do that, his phone number's in the chat, his email's in the chat. And David is awesome to work with. And he likes the Steelers. So if you talk good about the Steelers, I'm sure you'll get a discount. But he likes to talk sports too. So it's great. Part of my highlights of my week is talking sports with David. All right, Adriana, do you want to unmute yourself, or do you want me to just read this? Yeah, go ahead and unmute yourself, Adriana.
Thank you. It's a quick question. In order for you to deduct for your, your home, does it have to be under your name, or you can just wherever you live, you can use?
No, I mean if you're making payments on it, that's a whole other question as far as who's deducting the mortgage interest. But if you're making the rent payment, if you're making the mortgage payment, and you're paying the real estate taxes and everything you pay for, if someone else is paying it on your behalf, for example, then you wouldn't be able to deduct it. But if you're paying for those items, the utilities, etc., you'd be able to deduct it.
Okay, what if the home is already paid for?
Well, then you wouldn't have as much. If obviously you wouldn't have the payments to deduct whatever you're not paying for. So you wouldn't have mortgage interest deduct if you've already paid off the home. You'd still have real estate taxes. You'd still have insurance. You'd still have utilities. But I mean that's a good and bad problem. Obviously, it's good to have a paid off home, but you just deduct less if you don't have to if you're not required to make those payments.
Correct. Okay. Thank you.
We have time for 2 more questions. Who's going to be the last lucky 2 people? That was super interesting to hear about how the S corporation basically, like, the government doesn't look at every little detail on auto expense, so you don't have to necessarily even provide a mileage log if you're doing it as an S corp as opposed to just a person.
Well, if you got audited, you might. You know, they could still ask for a mileage log. What I was trying to say is you don't show on the Schedule C, you have to show total miles for the year and business miles for the year. And so people in our industry, they learn how to do business everywhere they go, and therefore they can deduct mileage everywhere they go, and therefore they have a higher business percentage that shows on the tax return, and that potentially, could raise a question from the IRS. I'm not going to say any likelihood or anything like that, but it's potentially, because they do compare. I have seen charitable contributions, for example, get audited because one person gives 40% of their income, and that's obviously a lot higher than the national average. And so they may not audit the whole return, but they'll do a line item audit and make them prove their charitable contribution deduction. So they potentially could do it, and so what I was saying is that on the Schedule C, you don't have to show total and business, you just show the amount. Same with home office.
Okay.
You don't have to show all the numbers calculating it, you just show office,
Oh, we got our last. Okay, thank you, David. That's great information. And I think that's what I'm doing, right? I think I am.
Yep.
All right. So we have our last 2 questions, one from Sally Passan in Seattle, Washington, and one from Lillian Galdiano in San Antonio. Sally's was up here. She says, office equipment is itemized or totally deducted in the year purchased. How about our cell phones?
Cell phone, you generally, you don't have to track it by the minute. The IRS does not expect that at all, but you'd want to, have a reasonable estimate of what you use. So if you're using it, if you spend $100 a month and you can say, I use this cell phone 80% for business, then deduct $80. Totally fine. Business estimates in many cases are acceptable, and that is one of them.
What about the hardware for the cell phone? Because now, like, the iPhone is like $1,000 just to have an iPhone, and then it's like I pay like $100 and something a month for my unlimited AT&T package. So I know that with my $100 a month that I pay AT&T, I can deduct 80% of that, let's say, because 80% of my calls are business calls. But I still paid $1,000 for the freaking phone. So. Right. That whole $1,000 I can write off as an actual deduction, correct? Yeah.
Now depreciation, to deduct it all in 1 year, say the $1,000 phone, let's just take an example. If you go and spend any money, $100 on office supplies, paper and pens, obviously that's a deduction in full in the year you pay for it. But in a situation like a laptop, or phones of $1,000, that's a fixed asset. Now, fixed assets have to be depreciated. Now, if you have net profit in your business, you can deduct it all in 1 year, in the year that you buy it. That's called Section 179 depreciation. But if you don't have a net profit, you cannot. If you're already in a loss situation, then your fixed assets, you depreciate it on equipment generally over 5 years. Now, if you do have profit, you can choose what is to your benefit. You can say, okay, is it to my benefit to take the $1,000 deduction on this phone all in year 1, or would it be better for me to depreciate it over 5 years? And in fact, well, even more than that. Then they also have a bonus depreciation, which is in most years, which is 50%. Even if you have a loss in year 1, and then the other 50% over the next 5 years. And you could say, well, I'm already getting, if you were in a situation, for example, where you already had a big business loss, or you didn't have a lot of business income because your W-2, your job income was low or whatever, then you could say, oh, well, it'd be my benefit to just take 1/5 of it basically in year one and take the other 4/5 in the years to come when I'll have more profit to take it again. So you can choose that as far as what you want to do as far as depreciation goes.
I know that a lot of people do that $1,000 phone, and they do like $44 a month for 2 years. That's what I did. I paid $44 a month for 2 years. So I can deduct that at whole $44 every month, right?
Yeah. You don't really pull it out at that point and say, oh, okay, well, let's back out.
Yeah.
$40 of every bill as a purchase. Just take the whole thing as auto expense. That's fine. Or excuse me, telephone expense.
Okay. Telephone. Yeah. That's what I did. I didn't pay $1,000 all at one piece. It was $44 a month for 2 years. Okay. Next question is from Lillian Galdiano. What is the charge to become an S Corp? So I guess, what do you charge, David? What did you charge? I mean, for me, it was
give me a call and I'll tell you the price to do the S corporation return, which is called a Form 1120-S. But to set it up, now I'm in Texas, and most states are probably typical. The filing fee you have to pay, you have to file. First, you incorporate with the Secretary of State in your state. And I'll give you Texas rates. In Texas, it costs $300 to the state of Texas, one-time fee to incorporate your business, plus $25 to expedite it, which gets it done in like a day or day and a half, as opposed to a week and a half to 2 weeks. So most people do that. So $325 would be the filing fee to the Secretary of State. All right. And then, we only charge like $150 to do the paperwork and get the EIN number from the IRS once it's put on file within a day or day and a half.
Okay, so basically $325 in the state of Texas, and then $150 for your help doing it all. So it would be a total of $475. I think that's what I paid back in the day. I'm sure it was.
Yeah.
It was exciting to start my own corporation. I mean, it was $500 or $475, but I was like so excited because I felt like, you know what, I'm a real business. I'm not just a person no more with a social. I can make my own bank account for my business. And then USANA, I had to fill out a special form with the company, with USANA that put my S corporation as the main, whatever in USANA's paperwork. So I just felt much more official, and I've had a business account ever since 2006. So literally the whole time. My corporation's name is Jared Crebs and Associates, because I thought that's kind of snazzy, like I'm a lawyer. Jared Crebs and Associates. That's what I'm called. Okay, and then we have another question here from Adriana Perez. If you haven't been keeping track, can you just have an estimate? What does that mean?
Track of your miles? Well, if you're talking about miles, then yeah. I mean, most of my clients, that's how it works. Hey, did you drive your car for business? Yes. How many miles? Oh, probably 10,000 miles for business. Okay, we'll go ahead and take that deduction, but understand that low percentage chance, but if you get audited, you'll have to come up with a mileage log. You'll have to pull those receipts like I talked about and pull out your calendar and start writing it down and prove it to the IRS if that day comes. So
yes, and that's actually what why I keep track on my iPhone of all my appointments, so that if I had to go back as you go, but I'm just sick of it, David. Sorry. I used to keep track. I used to keep track perfect, and now I'm like, eh. But there is a mileage app. You can write off the fees of the mileage app. That's true, Lillian. So and then can they go back up to 3 years? Adriana says they go back up to 3 years when they audit you, or how does that work?
Yeah, that's generally what they'll do. Is 3 years. And now, speaking of 3 years, you can also amend any tax returns. If you've done any business tax returns and you think, oh my gosh, I did not claim that, and the other, you can amend your tax return to get a refund. Now, they will not give you a refund if you file it within after 3 years of the original due date. So you can't file one that was filed 4 years ago. You can only amend the one the last 3. So that's some of you may be able to amend tax returns and get refunds if you didn't claim something.
Wow. Cool. Interesting. All right. Well, David, this has been phenomenal. I'm going to definitely review this recording. We recorded this call. We record them. So we really, really appreciate it. And just for anybody who listens to the recording, David's office number is 972-798-2046. Again, that's 972-798-2046. His email is david@thesmallbusinesscpa.com. I highly, highly recommend him to everybody all the time. And many of you I've recommended to him to already. But David, thank you so much for being on this call. Thank you so much for sharing from your heart. Thank you for really caring. You know, they say it's not so much, people don't care how much you know until they know how much you care. And you certainly do care. And you care about me and you care about the team. And we just really, really grateful for your time tonight. So thank you, David.
My pleasure, Jared. You're the best. Talk to you later.
All right, guys. Don't go away. Last announcement. 2017. Let's finish the year strong. Here's what's going on. We got GoPro next week. Oh my gosh, it's next week. I can't believe it's already here. So if you want to go, there's still tickets floating around. It's a $400 ticket. It's one of the most expensive events of the year, but you get what you pay for. It's going to be amazing. It's only 6-figure per month earners are allowed to speak on stage. So literally birds of a feather flock together. We're going to be having a blast in Las Vegas. And big congratulations to everybody who's already going. Super, super excited for this event. The people that are going right now from the top of my memory is Phyllis Walker, Rick Walker, Renee Martinez, Ralph Baez, myself, my wife Crystal, Becky Armstrong, Betty Meyer, Christian Glad. And if I'm forgetting anyone, please put it in the chat. But I'm super impressed and proud of everybody who's going to be able to make it out. We're going to have a blast in Las Vegas. If you want to get a last-second ticket, contact me. We can even work it out where you can room with us. We have a big house in Las Vegas, and we have permission to fill it up with Team DSI. So let's go. Also, going into 2018, Challenge U in Salt Lake City is January 25th through the 27th. San Antonio Challenge U is February 8th through the 10th. Please choose which one you want to go to. Obviously, most of you live in these 2 cities, but if you don't, I know there's several of you who don't, choose the one you want to go to and do it. And there's going to be a big incentive for our team coming out about this very, very soon. But this is the biggest event to start the new year, to start your 2018 with a bang. And I would make a goal, each one of you, to bring 5 to 10 people with you to this event. And that's in your team personally sponsored. Also, ladies, February 1st through the 3rd is the Sweet Retreat. And that's in the Hilton, Orange County, Costa Mesa. And that's going to be an amazing event for all of you ladies. Cannot wait to hear how it goes. I know Megan Martinez, my mom, and my wife. I'm not sure actually if my mom will be going this year because she's recovering still. But my wife and many of the Team DSI ladies are going to be there, represent. And then they're going to be announcing the national celebration dates very soon. And then convention is the most important event of the year, guys. This is the one. It's going to be our 26th international convention. There's people from all 20 different countries that are there. You meet Dr. Wentz, our founder, all the top doctors, all the top $1 Million Club members. Your ticket is $279. You have till July to buy it. Please start putting money aside. Please start preparing for this. This event is very critical to your success. If you have enrolled within the past year, you may have a voucher that would cut the cost in half. So your ticket price would be $140 instead of $280. So, or you might even have 2 vouchers and be getting in for free. So please contact your sponsor, but plan on this event. If you go to any event, this is the most important one of the year, August 15th through the 18th, 2018. Texas Associates, we're going to have a fun night. This Thursday, we're going to go see Thor together. It's going to be awesome. I can't wait for this. Thank you to my lovely wife, Crystal, for making this flyer and for really taking the lead on this event. We're going to have a blast. We're going to be all together in San Antonio and bring guests. This is a chance to have your guests come and just see what the USANA family is all about, have fun, see how we're not just a business family. We're also a family that has fun and does stuff together. And it's going to be fun. So even if you've seen Thor, because many of you have already gone to see the movie, come see it again. Lillian Galdiano. Just kidding. I know you're busy that night, but it's just awesome. It's going to be fun time. And this is the last picture. This is a picture of the bins that I keep in the trunk of my car. I want you to be prepared. Don't rely on your upline for their computer. You bring your computer. Don't rely on your upline for their copies of the forms. You bring your copies. Don't rely on your upline for the weekly action plans and DMOs. You have your own binder for your DMOs and weekly action plans. You be that leader. You are the one that's going to make the change in your society. You're the one who's going to make this a GoPro income. So that's how I want to end the webinar. Thank you all for being on. Let's go ahead and unmute the lines and everyone say good night, God bless, and thank you, David.
Good night.
Good night.
God bless.
God bless,
David.
and thank you, David.
Good night, God bless. Thank you, David.